Hello and welcome everyone to this short tutorial how to use the PatCom break-even analysis tool. The goal here is to find out how many studies do you have to do with your fees equipment to reach that break-even point. That is where your income and your cost are equal and where your positive return on investment begins. So let's dive right in here. In this tool you see the yellow fields, which are the ones that you can fill out with your own numbers. So let's go to revenue first, price per study. This is if you're a mobile fees provider, what you would charge your client, or if you want to do this for a facility that gets reimbursed, you could put the reimbursement amount in here. So we're gonna go with a mobile fees example, and let's say I would like to charge a grade rate of $350. And I put that in here. Now the next field, this is where I put the maximum number of studies that I would like to do in a month. Maybe as a mobile fees provider, I might do this part-time, or if I'm looking at a facility, what's your patient load in a month? I'm gonna look at part-time mobile fees and say maybe I can do 10 studies in 1 month. So this would be our revenue section right here, and as we can already see, the maximum revenue for a month that we can reach is $3,500. Now let's go to the variable costs and the fields here that you can fill out. Travel expenses per study. If I'm a mobile fees provider, I will have to drive to my clients in a facility. You could leave this at 0 probably. I'm going to say if I drive an average of 30 miles to my clients, and say that per mile I would pay 50 cents, we're looking at $15 per study of travel expenses. The next one here, this is our cleaning supplies per study. So if I bring my own high-level disinfectant and the enzyme sponges, for example, that is a cost that I have to factor in here as well. Let's say per study might be roughly $5 in my case. Next one here would be our feeding supplies per study. If I bring my own feeding supplies, the apple juice, the crackers, the food dye, etc., that is also a cost that I want to factor in to my analysis, and I'm going to set that at $5 as well here. The next point here is the endoscopist pay per study. So again, in a facility, you can look at, of course, hourly wages of employees, but for a mobile fees provider, I'm thinking about how much would I want to pay myself to perform the study, or if I want to hire employees, how much would they be paid. So I'm just going to put $100 in here, keep it simple, and press enter. So now what we see already is the variable cost per study is $125, and the maximum total variable cost per month will be $1,250, which is determined by the maximum number of studies that we would do in a month. Now the per study contribution margin, that would be $225, and for a month $2,250. So basically what that means is my revenue minus my variable cost, that would be my study contribution margin. And you also see a nice little graph already here on the right hand side that shows you the ratio between the variable cost and your contribution margin. Now, there's some fixed cost, of course, with performing the fees as well. And first and foremost is the equipment, the fees equipment that you have. Now, if you are, for example, leasing equipment or you're financing equipment, in this first field here, you can pay, insert the amount that you pay per month for the equipment. Or if you rent a system from PatCom, you could put the monthly rental for this equipment into this field. If you purchased equipment, what you could do is determine the amount of time that you give yourself to pay the equipment off. So that means if you spend $15,000 on equipment, how quickly would you like to have that paid off? Let's say within 2 years, then you would take 15,000 and divide it by 24 months. So you would be looking at $625 in this case. We're just going to go with our rental, which is $500 per month. So I'm going to put 500 in here. Next point is insurance. Especially if you own your own business and you have equipment, it's important to have good insurance. In fact, much more valuable than extended warranty, for example. And I'm just going to say I'll pay maybe $50 a month on insurance. And then I have a field here for other fixed costs that you might face in your scenario. Or if you are not sure at this point, I can still say, okay, my fixed cost per month might be another $50, just to give myself a little bit of wiggle room there. Now, as you can see, we filled in all the numbers in the yellow fields and now are able to look at our result. And right here, this number here, this bigger number, 2.67, this is how many studies I would have to do in a month to reach my break-even point. So 2.67, because you can't do partial studies, that means you have to round it up to the next bigger numbers, that's 3. Once I do 3 studies, I have reached and actually went beyond my break-even point, and this is where my positive return on investment starts. So if you use the tools, you fill in all these numbers, and that will be your number of studies that you want to do in a month. And this is where we would say, okay, it makes sense for you to pay for the equipment or own your own equipment if you can ensure that you will reach this number. There's another little graph here that gives you all the proportions of the variable cost per study, which is quite interesting as well. If you want to go to the next tab here, break-even analysis chart, this shows you basically the same information in chart form so that you can see when you can reach break-even analysis. Also, if you do have your own business and you are in need of a business plan, this might be helpful for you as well. And then last but not least, on the third page here are instructions of how to fill out these fields, basically the same thing that we did just now. Now, if you find this tool to be beneficial to you to understand whether or not it's feasible to have your own equipment, for your facility to have their own equipment, this is available for free to you as a download on our website. So that is www.patcommedical.com, and then you can subscribe to our newsletter or fill out the Contact Us form. In both cases, you will get a response email with the download for this break-even analysis.